Let's get into it. The chart of accounts. What's a chart of accounts? What's a numbering system for accounts? It's going to be in order of the expanded accounting equation. If you recall, the expanded accounting equation is assets equals liabilities plus capital stock or capital minus dividends or drawing plus revenue minus expense. We're going to use our previous example for Royce's consulting business for the chart of accounts. And here's an example of the chart of accounts. In essence, it's organized, again, by the expanded accounting equation. Assets begin with the number 1. Liabilities begin with the number 2. What I'm saying is any account that's classified as an asset will begin with the number 1. The numbers following the number 1, it can be any number whatsoever. It just depends on the company and how they want to set up their accounting records. Liabilities begin with number 2, as I said. Capital or drawing, or capital and dividends, begin with the number 3. Revenues begin with number 4. And expenses begin with the number 5. Now, you could be working in the accounting department in any business in the United States. And if the account starts with a 1, you know that's an asset. You don't even have to know what the account is. But if it begins with 1, it's an asset. If it begins with 4, you know it's a revenue account or an account that's classified as a revenue. As I said previously, we're going to go over Royce's consulting business once again as an example. So here it is. His chart of accounts are cash, accounts receivable, supplies, and computer all begin with 1. His liability account is accounts payable. It began with 2. And the capital and drawing begin with 3, in this case 301, 302. His revenue account begins with a 4, but the entire account number for that account is 401. And he has 3 types of expenses, and they all begin with 5. 510, 515, and 520. Hopefully that makes sense. Please let me know if you have any questions. So we're going to review, again, we're going to go over the previous example. We're going to analyze the transactions. So we're going to analyze the previous example. Then we're going to record it. Here, if you remember or recall from video number 2 or part 2, we had to see what accounts are affected, classify those accounts, see whether or not they're increasing or decreasing, and find out if those accounts are being debited and credited. Now that we're going to record them, we need to know what accounts were debited and credited. In this case, it's a credit of $50,000 to capital and a debit to $50,000 to cash. Where are we going to record them? Well, we're going to record them in a place called the General Journal. Now we're officially recording a business transaction, because before we were just analyzing it. So here we're going to record this business transaction. Your journal has a date column, description, PR means post reference, a debit column, and a credit column. You'll see it formatted different ways, but you'll always see these columns right here. Date is pretty self-explanatory. So here, this transaction took place on May 1st. So we're going to do the May 1st transaction. When you record in the General Journal, you always want to record what account is being debited first, and then what account being credited second. So again, debit always comes first, and credit is listed second in the General Journal. Let's start with the date. The date, you always have to state what year it is. Let's say it's 2020. And again, that transaction took place on May 1st. So you have the year, the month, and the day. Cash is being debited, so we're going to list that first. So there's our cash account. The post reference number is the chart of accounts number. So in this case, Royce's chart of accounts number for cash is 101. So you want to list that 101. So post ref is 101. Again, we're debiting cash for $50,000. I circled the wrong thing there, but it's still $50,000 either way. So $50,000, make sure you put that on the debit column because again, that's what we're debiting is cash for $50,000. The next thing is you want to list that credit account. Before listing the credit account, you want to indent from the debit account. So we indented, meaning create some space. So we have Royce Angelo Capital, that's our credit or the account that's being credited. The post reference for Royce's Capital account is 301. That's what you're going to put on the PR column. The credit is 50,000. So there it is. You have a debit of 50 and a credit of 50,000. Each debits equal credits. You're good to go. Now, the last thing you want to state or put down or record is a quick description of what's happening with the transaction. Here, I'm going to put owner investment. Notice that I indented from the credit account. So you want to always indent. The debit is not indented, the credit is indented from the debit, and the quick description of what's going on in the business transaction is also indented from the credit. Let's do another one. May 2nd. May 2nd, we have a credit of $4,000 to the cash account and a debit of $4,000 to the rent expense account. This is when he paid rent. This is May 2nd. Again, it's for $4,000. What you want to do is you want to skip a line. The date, we already listed what year it was and what month it was. So here you just have to put the date. You don't have to put the year or the month because we already did that on the top of the page. So remember, the account that's being debited, in this case rent expense, goes first. So list rent expense, indent from there, and put down your credit account. The account being credited is cash, and then indent from the credit to put a quick description. In this case, the business paid rent. Now we're going to look at the post-ref number or post-reference number. Cash is 101 and rent expense is 520. So rent expense is 520 and cash is 101. We're getting that from the chart of accounts. The amount is $4,000. So we debited rent expense for $4,000 and credited cash for $4,000. Important things there. You skipped a line before recording the next transaction. You didn't have to put the month and the year again and only put the date down because again, it's listed on the very top. Let's do May 5th. May 5th, we have 3 accounts going on. Oh no, I'm sorry, that's May 6th, but May 5th, you still have 2 accounts. Remember, skip a line. Forgot the date there, so May 5th. On the skip a line, put 5 for May 5th. Then you're going to list the account that's being debited first. So supplies is being debited and accounts payable is being credited, and you list that second after indenting. Then you're going to want to put a quick description and indent from the credit account. But let me put the post-reference number first. So supplies is 130 and accounts payable is 201. So supplies is 130 and accounts payable is 201. We have a debit of $1,500 and a credit of $1,500. Indent from the credit account and put a quick description, something like purchased supplies. That's a description line, so you shouldn't have any post-reference number there or an amount. That's for the debits and credits. So you should always have 3 things at least: a debit account that's being debited, an account that's being credited, and then your description. Let's go to the next date. This is the one that we have 3 accounts. It takes place on May 6th. The business bought a computer, paid some cash, and then the rest is owed and will be paid out in the future. So we have a debit of $3,000, a credit of $2,000, and a credit of $1,000 to those 3 accounts. Now we're on the second journal page. If you notice, it's journal page 2. If you look in the corner, we still have the same columns, And because it's a new page, we have to repeat the year and you have to repeat the month. This was on May 6th. So May 6th. And remember, you want to put the account that's being debited first. In this case, it's the computer account. You want to indent it for all your credits. The first credit is cash. And we have actually another credit. So you want to line it up with the previous credit account, which is cash, and your second credit is accounts payable. Notice they're lined up together, the same amount or the same spacing because they are both credits. Then you want to indent for the description. So purchased computer. I like simple descriptions. You don't have to write a whole sentence, just something real fast to describe what went down or what was going on in the transaction. So the post reference number or the PR is coming from your chart of accounts. I'm looking at the computer and the accounts payable. So the computer is 190 and accounts payable is 201. The computer was a debit of $3,000, $2,000 credit to cash, and $1,000 credit to accounts payable. Here, make sure that they both equal still. I mean, if you're transferring it from your analysis to the journal, you shouldn't make a mistake. Before you go on and record the next transaction, remember to skip a line. And their next transaction is on May 10th. Consulting fees and cash, where consulting fees is being credited by $800 and cash is being debited by $800. So again, that takes place on May 10th. I'm going to repeat, since on the top of the page you already listed the year and the month, here you just have to put the day, which is May 10th. Cash was being debited, so that's listed first. Indent for the credit, that's consulting fees. And indent for the description. Here, really, the business provided consulting services or provided service. For the post reference number, once again, you get that from the chart of accounts. I'm starting to memorize what cash is. It's 101. And the consulting fees is 401. So 401. This is for $800 debit to cash and $800 credit to consulting fees. To save time, I went ahead and did the rest of the transactions starting on May 13th. Let's recap. Debits listed first, credit listed second. You want a description. You have your post reference numbers from the chart of accounts. On the 20th, you actually had 2 debits, and so you want to line those up, and you have 1 credit, and finally your description. Make sure you're indenting correctly. Fill in the post reference number. Make sure your debits and credits equal by making sure your analysis is correct. And again, I kind of went ahead and filled in the rest of the transactions. So you could, if you had tried it, you could check your answers against mine right here. And we went all the way to the 31st, I believe. This is transactions for the 24th, the 28th, and the 30th. In the same exercise, we're doing the same type of procedure. Debit comes first, indent, credit comes second, and then a description. And I'm just showing it here real quickly, what I did for each of the transactions. One more time for the last transaction, put the month and the year there because it's a brand new page. This is journal page 5. Debit comes first, credit comes second, a description, the post ref, and your debit and credit. Now let's go really quickly over normal balances of accounts. If you remember, this was step 4 from the thought process, is how to increase accounts. See the previous video if you don't know what I'm talking about. But this is from the thought process, step 4. Here, it shows you how to increase accounts that are either classified as assets, expense, dividends, or liabilities, revenue, capital stock. If it's classified as AED, you would debit it. If it's classified as LRC, you would credit it. But this picture right here actually also tells you the normal balance of accounts. So for example, cash is an asset. So the normal balance of cash, which is an asset, is debit. Accounts payable is another example. That's a liability. The normal balance of accounts payable, which is a liability, is a credit because L is above credit. So any accounts classified as AED have normal balances of debit, and any accounts classified as LRC have normal balances of credit. Normal balance. Remember that phrase, because normal balance is what it should end up to be at the end of an accounting period. All right, here's another new concept, the general ledger. We're still recording the transactions. We recorded it into the journal. Now we're going to record it into the general ledger. The GL, it's also called that, general ledger GL, is essentially the T accounts. Remember we discussed T accounts real briefly? Each T account has the account name, which is cash in this case I'm circling, and the account number. And here are the titles of the general ledger: date, item, post reference, debit, credit, and then another set of columns, also debit, credit. The first set of debit, credit is coming from your journal. Whatever the journal says, whether it be a debit or credit, you want to mimic that on the first set of debits and credits. The last two columns, that's called the running balance. Okay, so there's a difference. I know it looks like it's repetitive, but it's not. Hopefully it becomes clear when we do an example. So normal balance on the last two columns. Remember, cash is an asset. It's above debit. So cash will have a debit normal balance. So cash is an asset and it will have a debit normal balance. Again, you'll see what we're talking about when we record the transaction. So there's my debit. And what I'm saying is you should only have amounts in the debit column for the running balance and nothing in the credit. I know it seems silly because the credit column is there, but you should not have anything going on that credit column because the normal balance for cash is debit. All right, so cash, that's an account name, and you got your account numbers from the chart of accounts. And each each account has their own table in the general ledger or the GL. I also have it here, and we're going to continue with Royce's consulting business as our example. See, I'm just circling the account names and the account numbers. All right, we're going to go back to one of the first transactions in the journal, because when you record it, it goes from you're going to journalize in the journal and then post to the general ledger. So here's our general journal. On May 1st, Royce put money into the business. It's $50,000. So you want to notice it's cash $50,000 and it's a debit on May 1st. So we have to go to the cash account and record that $50,000 into the general ledger. So remember that, May 1st, cash, debit of $50,000. Here's our GL, which is the general ledger. We found our cash account, which is right there, number 101. The first thing you want to fill out is the date. And I know it seems repetitive, but you got to always put the year and the month in the very first row. So 2020, May 1st. The item column is left blank for normal transactions. The post ref is the journal page number. And since we're pulling that from the first page, you could just put J1 down because it's from journal page 1. And remember, it was a debit of $50,000. So the first debit and credit columns is from the journal. The second set of debit and credit columns is a running balance. So right now we have $50,000 debit. You're just going to transfer that over. That's all that is. So you're going to put $50,000 debit. And we're done. That's how you post to the general ledger. We journalize in the journal and we post into the general ledger. Post is just another fancy name for record in the general journal. Now let's record the next line of our journal. The next line in our journal is a credit to Royce Angelo Capital of $50,000. So basically you're going line by line. Every debit and credit you have on the journal, you got to post to the general ledger. Let's find Royce Angelo Capital. It's right there. Account number 301. Like I said, on every first row, you have to put the year and the month. In this case, it's 2020, May 1st. Leave the item column blank for now. It's coming from journal page 1. That's why we put J1. And it's a credit of $50,000. And because it's a credit of $50,000, we're going to put it on the credit column for $50,000 on the running balance. That checks out because capital is above credit, and capital's normal balance is credit. All right, let's do the transaction from May 2nd. The business paid rent, and we're going to go with rent expense first. So we're going to go to rent expense. I know I'm sounding very repetitive right now, but every first row in the general ledger for each account, please put down the month or the year and the month, and then the actual date. And in this case, it is we did the second. Yeah, there it is. It's the 2nd. So we're going to go 2020, May 2nd. Leave the item column blank for now. We're still on the first page of the journal, so you want to put J1. It is rent expense, and it is a debit. And I'm already forgetting how much because I'm going a little fast, but it is for $4,000. So we're going to go back into our general ledger, and it's a debit for $4,000. We're going to carry it to the running balance, keeping track of what we have, and currently it's a debit for $4,000. Next, we have a credit to cash. Here it is. It's coming from journal page 1. And remember, it's a credit, so you want to put that in the credit column, okay? So we're going to go back into here. So cash is being credited $4,000. Now this is a credit, okay? This is very important coming up right here because this right here is the normal balance, the last debit and credit columns. The normal balance of cash is a debit. I'm going to repeat, you only want to put information in the debit column and not the credit column. So when you combine a debit of $50,000 with a credit of $4,000, your running balance right now is $46,000 debit. Hopefully I didn't go too fast, but you take the difference basically if you're combining a debit and credit in the general ledger running balance columns. All right, let's do May 5th. The business purchased supplies on account. We're going to go to the supplies. I know I'm sounding very repetitive. I know. I apologize. Remember, accounting is a language. We got to keep speaking the language. Supplies, it's on May 5th. And on the first row, you have to put the year and the month. So May 5th, it's 2020. Keep the item column blank. The post reference is the journal page. In this case, it's J1. J stands for journal. It's a debit of $1,500. And we're going to transfer that balance to the running balance of $1,500 debit. We're going to pay it later. We owe someone, so that's accounts payable. Let's put the year down and the date, the month and date. Item column is blank for now. Journal page 1 because it's on the first page. And the accounts payable is being credited, so we're going to put the $1,500 under credit and then reflect that on the running balance as credit because liabilities is above credit on the normal balance picture, which is the same picture for increasing accounts. All right, up next, I'm gonna show the rest of the transactions so it saves you a little bit of time. There it is, I filled it in like magic. Please feel free, I will include the PDF to the posts, so feel free to go through each transaction on the journal and make sure that it's reflected correctly on the general ledger. I'm gonna focus in on the cash account because this is the most involved account, the cash account. If you notice, there it is. There's a bunch of dates. The post reference column is filled in by the journal page, and we're gonna go over each transaction. So currently we have 46,000, and then we have another credit of 2,000. So you got to take the difference. So that 46 goes down to 44. So the 44,000 is debit is combined with the 800 debit. You're going to add if it's the same. 44,800 plus 500, because they're both debits, it's 45,300. Debit and debit, add again, add another 600. Now you have 45,900, and you have a credit, so you're going to take the difference. You get 45,150. 45,150 against 200 credit. It's a minus because it's different. And then finally, 44,950 combined with a credit. That's a minus as well, or you take the difference. And so your final balance is $44,850 for the cash account. Remember, if it's the same, add. If it's different, take the difference. Accounts receivable, let's go over that. We have 600, 600 debit, 400, 400, another 400 debit, so you add. And in that third transaction, it's a 600 credit. So you have $1,000 debit and $600 credit. You have to take the difference, which leaves you with a running balance of $400. Supplies only had one transaction. It's a $1,500 debit. So that's your running balance is $1,500 debit. The same thing with computer. 3,000, 3,000. That's pretty easy. Let's look at accounts payable. Accounts payable, you had two transactions going in there, a $1,500 credit and another $1,000 credit. So they're the same, so you want to add that. So 1,500 plus 1,000, that's $2,500 credit. Let's go to the capital. We only had one transaction there. It's just 50,000, and there it is. The ones with one transaction, it's pretty easy. Royce Angelo drawing, 100, 100 debit. Again, those last two columns are your running balances. We're going to go to the next page, or the general ledger. In consulting fees, we had 3 transactions total, an $800 credit. Then we had another 600 credit, and because they're both credits, you add, so you get 1,400. And you had another credit, 900, so again, also add that because they're the same. Credit and the credit's the same, so add. Here in wage expense, we only had one transaction. Same case it's the same case with advertising expense and rent expense. So I'm going to repeat, if they're the same, combine, and if they're different, take the difference in the general ledger when you're posting to the general ledger running balance. Let me know if you should have any questions about journalizing and posting to the general ledger. The last topic for this video is the trial balance. The trial balance ensures that debits equal credits. So first we journalize in the journal, then we post to the general ledger, and from there we create a trial balance. And later we'll learn this trial balance is actually called an unadjusted trial balance. So what's the purpose of this trial balance? To ensure debits equal credits. You want to make sure that you recorded all your debits and credits correctly when you analyzed it, when you journalized it in the journal, when you posted it to the general ledger. Now, the trial balance, you have to list all the accounts that you used during the period, during the accounting period. And guess what? Those accounts are in order of the chart of accounts. Next, we have a debit and credit column, because we're going to keep track of the running balances and see if all the debits and credits equal with all the accounts combined. So let's look at cash. Cash, you just look at the very, very last line, which in this case is $44,850, and that's a debit. So again, you only transfer the final line from the ledger for each account. So $44,850 debit. Our next account is accounts receivable, and currently our amount or running balance is at $400 debit. So you go back to your trial balance, go to accounts receivable, And then in the debit column, you want to put 400. Notice I put the dollar sign on the first amount, or is the first value, and you don't have to keep repeating that dollar sign. Always put the dollar sign on the first dollar value or amount, and then put it on the very last one, totals on the bottom. I'll show you in a second. But here I'm just going to fill it in to save you some time. I'm basically going back to the general ledger and seeing what the current running balance is for each account. So for accounts payable, let's go there. Accounts payable here, if you notice, it's a $2,500 credit, okay? $2,500 credit. And the reason I fast forwarded to accounts payable is here you get used to putting amounts in the debit column, and suddenly one of the accounts is actually a credit running balance. So make sure that you don't accidentally put it in the debit running balance or debit column, but put it in the credit column. I know that accounts payable and capital are both credit running balances or normal balances, so that's where the amount should be in that column. Drawing or dividends is usually on the debit side. Consulting fees, which is revenue, is usually on the credit side. And all your expenses are usually on the debit column or the debit column side. And rent expense is the last one. In reality, whatever your normal balance is, that's where they belong. And if you forget, just check your general ledger because it shows where the running balance is, whether it be on the debit side or credit side. So your last step is to make sure you have dollar signs at the very last line, which is your totals, add your debits up and add your credits up. And if you did everything correctly, your debits and credits will equal. And in this case, for debits, we have $54,800. And for credits, after adding it up, it's $54,800. And there you go. Your debits and credits equaled one another. You did an awesome job from journalizing, posting, and then now creating a trial balance, which becomes very important because this trial balance is used to create the end goal of accounting, which is financial statements. So journalize in the journal, post to the general ledger, create a trial balance, and then from there create these financial statements. These financial statements are the income statement, the retained earnings statement, or owner's equity statement, it's the same thing, the balance sheet, and cash flow statement. We are going to get into that in the next few chapters, but I just wanted to give an overview about financial statements and what their formulas are. And I did it in the last video as well. So in the next few chapters, I will go more in depth into financial statements. In chapters 1 and 2, you want to focus on analyzing, journalizing, and then posting to the general ledger to be able to create a trial balance.